look at that move in the price.
Yeah, Josh, you're seeing a big move in Meta there. Shares up almost 9%. So I want to just hit the high-level numbers here for you first. So in that second quarter, Meta reporting adjusted earnings per share of $7.14. That was against a street estimate of $5.89, so a pretty significant beat there. Then you move over to Meta's Q3 guidance. That also coming in better than expected, at least up from a sales perspective. Meta guiding for a range of $47.5 billion to $50.5 billion. Street estimate was looking for 46.2. Of course, Josh, when we talk about a company like Meta and how much they've been spending, CapEx is a key part of this conversation, right? So Meta moving up their CapEx range for the full year to $66 billion to $72 billion. The bottom part of the range had been 64. So yes, boosting that range a little bit, but remember, they had actually boosted their full year CapEx guidance, the entire range, going back to last quarter. So I know some analysts on the street were perhaps worried to the extent that Meta had been spending, and perhaps too big of a move in CapEx would have been downside for this stock. But right now, most of those numbers I read, Josh, significantly better than what the street expected, and you're seeing the stock act like it.
Huge move. We're up more than 9% now in the after hours. I mean, to your point, Josh, we know this company's all in on AI. They have been spending, they've been hiring. You just heard Zuckerberg talking recently. The company's going to spend hundreds of billions of dollars to build data centers around the country. Bulls, of course, to your point, though, they look at all this spend and they believe, and investors seem very optimistic, that there's going to be some long-term meaty ROI on all that spend. It's not just the spending, it's the hiring. We were talking to Dan Howley earlier, how Zuckerberg continues to poach just top AI talent from his rivals, which is, I mean, listen, reportedly the pay packages are incredible, but you also do kind of wonder, is it just the pay, or do a lot of folks, are they excited to also just work with Zuck on his AI projects and his AI strategy?
I would think that's going to be a big discussion on the call, right? Is sort of what is exactly going on with a lot of this investment. And Meta did call this out in their release too, Josh. So Meta said they are expecting upward pressure on 2026 total expense growth rate. We expect the second largest driver of that growth to be employee compensation as we add technical talent into priority areas. So they're already getting out in front of it and they're talking about it. They know that this is a big topic of discussion. It feels like over the last month and a half or so, most of the headlines surrounding Meta has been how much they're paying employees to get talent over there and continue building AI. Finally, just to give a quote from CEO Mark Zuckerberg, he's talking about superintelligence, of course, Josh, which I still don't quite understand necessarily at this point.
Just ask Howley.
He's excited to build personal superintelligence for everyone in the world. So we're going to know more about it at some point.
I did see even some well-known bulls heading into this print. Bulls saying they thought that, hey, the valuation is kind of screening expensive here, but look at this one. We're up 9% over here in the after hours. Thank you, Josh. Microsoft, bottom line, I'm seeing a Q4 EPS print of 365. I don't see a compare yet on that bottom line. The top line, though, I see Q4 revenue, $76.44 billion. That is a beat. The street was looking for $73.89 billion. Another key metric, Q4 Azure and other cloud revenue, XFX, that is growing, that pops 39%. That is also better than consensus. The street was looking for closer to 34%. Azure's surpassing, it looks like, $75 billion in revenue this year, up 34%. And not surprising, Josh, here's another big tech name. They report, and that stock moving 7% in the after hours.
We were just talking about Meta, Josh, and you mentioned some analysts perhaps being worried about valuation, right? Well, look at Microsoft stock since the bottom. The stock's up 40% since April. Like, we are not seeing a 7% move in Microsoft right now on a stock that has not been significantly rallying. It's essentially trading at an all-time high. So it gives you a sense sort of how much investors like this report. I think that Azure beat, as you pointed out, certainly key. And then I think you tie these two prints together, start to form a little bit of a macro narrative from what we're hearing from two big tech giants here. Continued raising of CapEx guidance, right? Or at least reaffirming of CapEx guidance. They're continuing to invest in AI, and also continued earnings beats. When you think about what has been the key driver of big tech over the course of this rally, it has been, yes, the expectations are always high, and they continue to move above that bar, right? And you're seeing that happen once again for what feels like a lot of consecutive quarters in a row now for sevevel of these big tech giants.
To your point, Josh, analysts were quick to emphasize the bar was high here into this print. I mean, the stock had been on a run since that last print. Listen, you're going to more talk about Azure momentum, Copilot adoption. What do the trends look like there? CapEx spending trends. It looks like Q4 CapEx, including leases, $24.2 $2 billion. Street was closer to $23.17 billion. But lots of tension here on AI, on the cloud businesses, and of course, you'll be waiting for the call. That is when you would traditionally hear CFO Amy Hood tell you about the guidance, give color on that forecast.
And as Dan Halley has pointed out too, Microsoft has been one of the companies that's early in their release and in the call to really sort of line item where AI is impacting their business. AI is contributing X amount percent growth to Azure. AI is contributing X amount percent growth to another part of the business, maybe it's Copilot. And so how they're able to lay out those numbers usually talks well to the street and talks well to investors. So as we think about what's coming in the call and sort of things to watch, I'll be looking at that.
Well, Meta and Microsoft surging after reporting their latest quarterly results. And join us now to take a closer look at the Mag 7 names. Let's get to D.A. Davidson Managing Director Gil Luria. Gil, it is great to see you. So big tech reports and making big moves here in the after hours. Gil, I know you cover both these names. I know, Gil, you like both these names. Let's start with Meta. This stock is up now 10% in the after hours. What do you make of the results, Gil? Is that move justified in your opinion?
Yes. Yeah, the results, the stock moves make sense. The results are that good, both for Meta, and we'll talk about it in a second, for Microsoft. For Meta, they were able to grow revenue 22%. That's a significant acceleration from last quarter. And the context is Google grew its ad business closer to 12%. So Meta is gaining significant share in the digital advertising market. They're doing it with while keeping, at least to date, expenses under control, and therefore investors have patience for the CapEx guidance that they're providing. For this year, it's only a slight increase, but there was a comment in there about a significant increase in CapEx again into 2026. Investors will have patience for that. As long as revenue is growing this fast, they're selling a lot more ads and they're selling them for a lot more.
So they're spending, Gil, but is your point, listen, we're seeing the ROI on that spend?
To some extent. It's more that investors with Meta have always had patience for the longer term investments when the current business is doing well. When the digital advertising business that is the lifeblood of Meta is doing well, investors have patience for Reality Labs, for Metasphere, and now for these longer term super intelligence investments. That's what's happening, which is to say, the AI investments do pay off in the core business. This is how we sell more ads, and we sell them for more, is by being very good at AI, by being very good at developing the right feed and serving the right ads, and then being able to monetize that, which Meta is getting increasingly good at. But the investment is well beyond that. The investment, as you talked about earlier in the hour, is about Mr. Zuckerberg's pursuit of super intelligence, whatever that may end up being.
Let me ask you, Gil, taking a step back, when you think about Meta's role, strategy, competitive advantages in that broader AI market, how would you define those advantages?
Well, so one is they're working towards another platform, the next platform, hence the Meta Ray-Ban glasses and Oakley glasses. They want to have the next platform because they don't like that fee that they have to pay Apple and Android for having their applications on their devices. They want their own device, and AI is a big contributor to that. And then they're also working towards having the dominant AI model. Let's not forget, a year ago, Llama 3 was cutting edge, was state of the art. Llama 4 failed, which is why they have now gone and aggressively invested in talent. So the next iteration of Llama can again be state of the art. So they can again be front of the pack in this pursuit of an omnipotent AI model.
To your point, I mean, Zuckerberg is aggressively poaching successfully top AI talent from rivals. When you think about the risks to this one, Gil, I know you have a buy on this one, but when clients ask you, what are the risks I do need to think about? What do you tell them?
That founder mode is great when things are going well. It's been more challenging owning Meta and before that Facebook when things don't go as well. If the advertising market rolls over because of a weaker consumer, investors may lose patience for Mr. Zuckerberg's aggressive investment. So that's the two sides of the coin are when things are great, you want to have founder mode. When the core business doesn't do as well, you have a little bit less impact as a shareholder.
Let's switch gears here, Gil. Microsoft, another name you cover, another name you like. Also, Gil, we are surging higher here in the after hours. We're up more than 7%. What do you make of those results?
They're even better than it seems. This is a company, one of the largest companies in the world, that just grew revenue 17% year over year. Their Azure business grew 39% in the quarter. That's a business that's going to be more than $100 billion this upcoming fiscal year, growing 39%. And it's not just the cloud hosting business and the GPU access business. Those businesses are growing so fast, but they're also drawing with them the rest of Microsoft business. They're growing their consumer business, their enterprise software business by high teens and into the 20% range. This is remarkable growth at this scale. It far exceeded expectations. And unlike Meta, they are doing this with more responsible spending. They are figuring out a way to invest in CapEx, build this new capacity, but they are also finding ways to offload excess capacity in the short term so the CapEx numbers don't get out of control. That's why they're also going to be adding about 200 billion of market cap tomorrow.
On the call, Gil, the conference call, that's when you traditionally expect CFO Amy Hood to provide guidance. What do you think we're going to hear there in terms of a forecast?
So I would expect her to try to tone down expectations so that we don't all raise our numbers by the extent of the beat today, but continue the optimism and continue to talk about how they're meeting demand, and then a more nuanced conversation of CapEx. That's what a lot of investors are going to be listening for, is how much increase in CapEx is there going to be into fiscal 26 in order to continue to support this growth. She has already said that CapEx will grow, and it will grow at less than it grew in the last fiscal year. She's going to refine that guidance for us, and the point to which they're investing in CapEx will tell us how much more efficient their business has become.
Let's say, Gil, you had the chance to ask CEO Satya Nadella a question or two on that call. What would be top of mind for you?
Is the growth in AI going to drive GDP growth of 5 to 10% in the future? I think this is where a lot of the conversation is AI growing exponentially, which again is how we explain Mr. Zuckerberg's investment. Is it going to accelerate growth for Microsoft and all of its customers to a large extent, which again would justify some more investment? Or are we still believe that we're in the current patterns of growth that require more caution on the investment? That's really the big question now, because let's not forget, Microsoft is so big that a lot of their growth depends on how much AI accelerates the growth of the overall economy.
Gil, always good to see you, my friend. Appreciate that instant analysis. Thank you.
Thank you.